are going to basically explain in this session what a stable coin is, what are some characteristics of it, and then Dr. Basit is going to take over in the second half of the presentation where he's going to give a demonstration of stable coin working, transferring coins from one address to another. I think in the previous panel discussion, it has already been discussed that stable coins is now one of the proven use cases of blockchain. This is something that is legitimately there now. It has a large market size. Oh, this has stopped working. Why is it not working?
Slides.
Slides are not working. All right. Actually, now it's working. That's great. So we can start off with sort of explaining what a stable coin is. It's a cryptocurrency token that's a fungible unit of financial value that's pegged to a currency or some other asset. It can be traded directly between parties or converted to another currencies or pegged assets. So there's a lot that's going on over here, and we can just explain them one by one. What does it mean? First of all, a stable coin, one of the properties of stable coins is that it's tokenized. What that essentially means is that it's on the blockchain. It's there on the blockchain. If you control the address where stable coins are, if you have the private key to that address, you actually control that asset. It's there present on the blockchain. And it's managed by a smart contract. Its operations are managed through a smart contract. It's fungible, which means that it's same. Each coin is similar to the other, just like a US dollar. Each US dollar has the same purchase power, power. Doesn't matter who holds it. At the end of the day, they are all the same. It's tradable, of course, it can be exchanged. People can transfer stable coins from one address to another. Finally, it is convertible. It can be redeemed for other currencies or the underlying asset that it's pegged with. And today we are going to talk about two examples of stable coins. Ones that are backed by a fiat currency, and secondly, that's backed by an asset. So here, for example, we have all the total market of stable coin, and we see that by April 2026, almost 95% of the stable coins are fiat currency backed. And most of the stable coins that we know of, for example, USDT or USDC, are fiat currency backed stable coins. A small percentage is non-currency asset backed, and then there are some other types of stable coins, for example, backed by a cryptocurrency, and so on and so forth. Now, if we talk about the fiat backed currency backed stable coin, some of the properties of this is, first of all, that's a CFI. It's centrally managed by an entity. What that means is that, for example, if Circle is issuing a US dollar stable coin, Circle is a company, it is registered, it has employees, it has an office, it operates in a jurisdiction, and this centralized entity is responsible for holding and managing the collateral. The collateral in this case is going to be the US dollar assets that they hold against the stable coins that they have issued. Collateralization has to be fully collateralized. So if, for example, Circle has issued $77 billion worth of stable coins, they will have $77 billion worth of US dollar assets. This could be in form of liquid cash. This could also be in the form of US treasuries short term. So it could be treasury bills, bank deposits, or commercial papers. As I've mentioned, stable coins are on the blockchain. There are several operations that are performed. The first one being that of minting. So for example, if somebody wants a US dollar stable coin, they are going to deposit a certain amount of US dollars, and stable coins will be minted against that amount and transferred into that person's wallet. Burning is the opposite of this. If a person wants to redeem their US dollars, let's say, against the stable coins that they have, they're going to send those stable coins on a smart contract. The stable coins will cease to exist, they'll be burned, and this person will be able to redeem the US dollar value against these stable coins. Direct transfer between addresses, this is mainly what it is. You are transferring stable coins, assets between addresses, one person to another. Finally, there's also delegated spending on behalf of stablecoin holders. This is a bit nuanced. Here you can delegate your stable coins to a smart contract or a third party who can transact them on your behalf. This is how a lot of the DeFi applications are built, where you are delegating some of your stable coins to them. They are trading them or sending them to other addresses based on whatever the requirements are. Now, there's a reason why 95% of the stable coins are fiat currency backed. The first of the advantages that they have is that there's no Oracle dependence. Oracle is basically these data, transfer where you are. If, for example, a stable coin is backed by gold, you need to know the real value of gold at that point in time. Whenever you are, let's say, minting or burning stable coins. Now there are problems with this. The Oracle, the data can be corrupted. It can be deliberately changed. It can be hacked into. In case of your currency, fiat currency backed stable coins, this danger does not exist. The stable coin is always going to be pegged to $1, and that's going to be the amount of it. So there's no dependence on any external data sources to determine the market value. There is a stability mechanism within it. This can be, so if, for example, the price of the stable coin decreases, you can always, there's an opportunity for arbitrage. So for example, if a USDC dollar, circle stable coin starts trading at $0.97, there's an opportunity for people to buy that stable coin for $970. You can buy 1,000 coins and then you can redeem for $1,000. And the other way around, if the price of the stable coin goes up, there's again an arbitrage opportunity. So that arbitrage opportunity basically makes sure that there's a stability mechanism built in. Finally, there's a regulatory compliance. This is a very important aspect of fiat currency backed stable coins. Because they are managed by a central entity, these entities are governed by regulations, by audits, by their compliance to the jurisdiction where they operate in. They have to abide by the laws, they have to report any suspicious activities or transactions. So, all of this enables, it makes it more palatable for the governments. The governments are more receptive to stable coins because it allows them to regulate within a regulatory framework, and this allows government to have an oversight on how they are being used. These are some of the most common fiat currency backed stable coins. We see US dollar Tether, USDT has the highest market cap. Then there's US dollar coin, which is where the issuing authority is Circle. This issuing authority makes it CFI. So, however, now you're trusting a centralized authority when you're buying the stable coins. You're trusting them. You are trusting on them that they are keeping the reserves, and through periodic audits and other regulations, they are making sure that they are maintaining the collateral against which you can redeem your stable coins. One other example of stablecoin is non-currency asset-backed stablecoin. An example of this is Pax Gold stablecoin, which is one coin is redeemable to 1 US troy ounce of gold. This is also managed by an off-chain centralized entity, just like the fiat currency-backed stablecoin. Over here, you have a centralized entity that's managing these assets, and through periodic audits, people are able to, they are constantly signaling to the market how much collateral they are controlling. It's collateralized again, just like fiat currency stablecoin. This is also fully collateralized. So if Pax Gold has issued 1,000 stable coins, they have 1,000 troy ounce of gold in reserve, which can be redeemed against this. Over here, this is also a smart contract based operation. You have blockchain as an interface where you have transactions taking place. However, the actual collateral management remains off chain. This is a very important aspect over here. The blockchain at the end of the day is just an interface. It cannot ensure that the actual amount of gold or reserves are there. That has to be done through regulation and by trust on the centralized authority. Stability mechanism is achieved in the same way as it's done with the fiat based stable coins. If, let's say, the Pax Gold stable coin starts trading below 1 troy ounce of gold. There's an arbitrage opportunity now to sell that coin to buy and buy 1 troy ounce of gold. The regulatory compliance, however, in this case is a little more complicated. So there are two layers of compliance over here. One is the compliance of the stable coin as a financial instrument, and then second is the underlying regulation through which that commodity is regulated. And that is why we see that these stable coins do not make up a very large market share. This was also mentioned in the panel discussion as well, that when it comes to tokenization, there are a lot of challenges that exist. And that is why fiat currency backed stable coins make up majority of the stable coin market that's out there. These are some of the non-currency backed stable coins. We have Paxos Gold, Tether Gold, and Gold Coin. We can see overall they are small in market size as compared to the fiat currency backed. Now we'll proceed with the demo of Cedar Coin, and I'll let Dr. Basit take over. Thank you.
Thank you, Ussama, for explaining this. So, can you go to this slide? Just want to set the stage. So, in here, what we are going to show you is we will be actually making use of the stable coin that our center has issued. So we, as a center, have issued Cedar coins. We call them CDC to our students and even participants. So someone was saying they need Bitcoin. So Bitcoin, again, $78,000. We cannot issue that. But what we can do is we can issue our Cedar coin, as many coins as you like. And these are actually pegged to monopoly dollars. So you can either redeem these Cedar coins, either we have monopoly dollars in our vault. This is the most secure vault for monopoly dollars. When someone opens it, it alarms, it rings the alarm. So we have the monopoly dollars. Right now, I think we have over 687,000 monopoly dollars in our vault, and that amount will actually be shown in this demo. So this Cedar stable coins, they follow the ERC20 token standard. That's the standard that is used. USDC also follow the same standard. And users who have the stable coins can transfer these stable coins to other users. And if you want to redeem it, you can redeem it from Huzaifa, who has this vault. He is the issuer, he is the custodian of our vault. And you can also buy meals at LUMS Pepsi Dining Center, which is right across this academic building, academic block building. You can use these to buy meals, so meals on us. We actually did that in some Cedar sponsored events. In the startup weekend event last year in November, all the participants, we served their meals. They had the option menu to select the meals that they want to buy, and then they redeem those stable coins at the Pepsi Dining Center. The smart contract for this Cedar coin, this is deployed on an Ethereum Sepolia blockchain. This is a test net. That's an actual blockchain, but this is used for only testing purposes by the developer, so we don't have to pay any network fee. And I'm in this demonstration, we'll also show you how much a transaction cost in terms of Ether and what's the dollar value of that Ether. We will be using MetaMask wallet for issuance of Cedar coins, transferring of Cedar coins, and redemption of Cedar coins. MetaMask is a wallet, and if I would like to just take a minute to explain what a wallet is. Wallet is a software that is used to interact with a blockchain. And it provides three functionalities. One, it manages your cryptographic keys, your public address, which can receive tokens, which could be the Bitcoins, Ethers, stable coins, USDC, and so on. And then it manages your private key. That's secret. It keeps it secret. Sometimes it doesn't even give you the private key, but it's stored there. in your wallet, and it is used to sign these transactions. So if you lose your private key, you lose your asset on the blockchain. So essentially, wallet enables you to create and sign transactions, send transactions to the blockchain, view your balances and transaction history, and it can connect with smart contracts and DeFi apps. There are two types of wallets, custodial wallet and non-custodial wallet. MetaMask is a non-custodial wallet, meaning that you have your own private key. Nobody else is keeping custody of your private key. As opposed to non-custodial wallet, a custodial wallet is one where the wallet provider or an exchange, they have custody of your wallet. They have your private key, so they will issue the transactions on your behalf. And in tomorrow's demo, Dr. Zartash and his team, they will demonstrate transactions, specifically remittance transactions using custodial wallets. Here, we'll be using non-custodial wallets. Now, Josefa, could you switch to the demo? Okay, so here is our main portal. If you connect my wallet, if you click on that MetaMask, that little icon, that's my wallet, and he knows my passkey, so he can enter that passkey. So now my wallet is connected. So this is the actual wallet that will be making the actual transactions on the blockchain, and this is the interface that we have developed. So if you look at the Cedar coin, the total supply is 635,645.63. And this is the owner address, the issuer address. So Josefa is the issuer. So he has issued these many stable coins to different users who have deposited their monopoly dollars in this vault as a collateral. Now, this wallet is not, this screen is not showing the view of the issuer. This is the view that I, as a user, would see. And I want to check my balance. So that ERC20 token standard, it provides me these 4 functions: checking my balance, transferring my coins to someone else, or I can delegate authority. So let's say if I'm the director of Cedar and I want to delegate authority to Josefa or other staff members to spend these stable coins on my behalf, then I can delegate that authority to them, can provide a cap, and so there I can go and delegate that authority, approve allowance, and transfer from. So now if they want to spend those stable coins, they will be using this function, transfer from, whereas I will be using this function, transfer. So therefore, can you please check my balance? Now, everything is on the blockchain. So if I want to check my balance over here, again, here it says leave blank for self, because my wallet is already connected. So it has my address, so it can check my balance. So my balance is, Josefa, can you click here? Where is that? It's 9,500 CDC. But Josefa, if you want to check someone else's balance, so let's say Josefa's balance, Josefa, this is his address, and he has around 17,743 CDCs. This is his address. So again, everything is recorded on the blockchain. As in the first session you learned, it provides some kind of anonymity, but it doesn't provide privacy. If you are able to link that address to Josefa, then you know Josefa has that many CDCs in his wallet. Now, Josefa, let us make a transaction. So let's transfer 2,000 stable coins. I think we shared some instructions, so you can, if you have followed the instructions, created your MetaMask account and shared your address with us, we can transfer those Cedar coins to you. And anyone You have that. You created that, and you shared your. You have the MetaMask, but we need to know your address, ERC20 address, but that might take some long time. If anyone else has shared, you have shared. What's your name? Saqib. So do you have Saqib's?
We haven't had it. Haven't received it. I transferred to Abdullah's.
Oh, let's transfer to Abdullah. Maybe there is a lag here. So, but we have Abdullah's address over here. We know. Is the internet working? Okay, Saqib, your address is yours. Okay, so that's Saqib public address. Let's transfer 2000. So again, this is a front end. This transaction will go to my wallet here. It will give me, this is the amount, this is the Saqib's wallet address, and I need to confirm this transaction. So once I confirm this transaction will be signed, and this will be posted to the blockchain. So did we confirm? Okay, let's do the confirm. Okay, now it is being processed. Status is pending, and now it's confirmed. So it goes to Ethereum blockchain, and in Ethereum blockchain, a transaction block is created after every 10 seconds. So in a minute, 10 blocks are created. So if I want to go, so this is the transaction that I sent. If you click on this transaction, so this is the detail of this transaction. The total network fee that was used is this 0.00005305 Sepolia. So that's the network fee that was paid. And if you convert that, I think that would turn out to be around 20 to 25 cents. It's 12 cents, yeah, it's 12 cents in US dollar. So that's the conversion based on today's Ether rates. Now, Huzaifa, can you go to this blockchain explorer and we can see this transaction? So this is the actual Explorer, blockchain Explorer. This is the Sepolia chain where this transaction is listed. This is my wallet address. That's Saqib's address. Saqib, can you confirm whether you have received 20 Cedar coins? 2000. So, sorry, 2000 Cedar coins. Sorry. Yeah, while he's confirming, he's checking. Let me go. And there are 4 blocks that were added after I posted that particular transaction, which was posted 56 seconds ago. The fee was $12. Sorry, 12 cents. Okay, anything else we want to show here? No. So if if you click here, so this take us to the Cedar Coin smart contract, which list, if you go down, all the transactions that have already that we have done since we launched this Cedar Coin back in August 2025, and I think we have over how many? Several hundred transactions. This is the total supply. So these were the total transfers that we made. And we have a record, or not we, the blockchain has a record of each of these individual transactions. So now this was just to show how we can transfer Cedar coins. But how we can use these stable coins for making payments. And for that, we would like to take you to our PDC website, where we have integrated our Cedar coins with our Pepsi Dining Center cafeteria online website. So if you see over here, right now, it's only time you can buy only bakery items as well as fast food and snacks. But if you are from 12 p.m. to 3 p.m., you can buy lunch, and later on during the dinner time, you also have option to buy dinner. So let's go to this bakery and drinks menu. So here this is the actual menu. This is a real-time feed from our website. And you can, so let's add strawberry juice, maybe some coffee, and some sweet item. Okay. So these are all added to our cart. And if you click on that cart, these are the items I have chosen. Now I have the option of paying with stable coins. So if now this is now connected with my wallet. This is actually my wallet. So this application has connected to my wallet, and this is actually my balance after making that $2,000 transfer. The total amount that I have to pay is 300 CDC. Let me pay it now. So once I pay, again, I'll come back to this wallet, which will say $300, sorry, 300 CDC needs to be sent to this wallet address, which is the wallet address of PDC. I'll confirm that. And once it is confirmed, may take 10-20 seconds. This will go back here. Payment is successful. My receipt is generated. So so this is the actual receipt, which has all the menu items that I ordered, and this is to go down, this is the QR code. So I'll take this on my cell phone. We also have a cell phone app where you can do the same. You can take your cell phone to PDC counter, they will scan it and deliver you the food. So that's how you can use stable coins for buying coffee, for buying meals, and so on. And it's very convenient, and everything is recorded on an immutable ledger. So this concludes our demo. Now, if you have any questions, we'll be happy to answer your questions. Here is his husband. Yeah.
The address of PDC.
That's hard coded, but if you want to make anyone, like when you go to any counter, want to pay through JazzCash, EasyPesa, there is a QR code. So you can scan the QR code, the address will be displayed on the system or on app.
Collateral, like if it is something that I need to consume it, so why I need to have the collateral sort of stuff
To maintain the stability. Agar collateral nahi hoga, so there is no stability. Now, the ownership of that asset is transferred from me to you. जैसे पैसा होता है, रुपए हैं. अब रुपए जो हैं, again, there is some value, हामिल हाजा मुतालबे पर अदा करेगा.
Okay, I get
So
it.
that's the collateral.
Okay, I get it. Okay, I get it.
Yes, ma'am.
In this system, the private keys remain with you. So if MetaMask stops working, you have access to that private key.
Yes.
How do you access your asset or your value without the MetaMask app?
I have my private key. I can download some other wallet, add my private key over there, and I'm good to go.
This makes it decentralized in a way that no exchange can limit your drop.
It's not decentralized in that sense, because it's decentralized because of the underlying blockchain, which is decentralized, but it's non-custodial. I hold the custody of my keys, whereas in custodial wallet, the exchange or wallet providers, they hold the custody of my key for regulatory purposes. Here, again, I can receive Bitcoins, I can receive other assets, and regulator may not know that unless they can link that particular address to me. Yes.
Any thoughts on how you would define the redemption process?
Any thought? Okay. So Huzaifa, if I want to redeem, he is the issuer. I'll transfer those CDCs to the issuer's address. The issuer will burn these CDCs out from that circulation and will give me the monopoly dollar. Same USDC circle will do the same. Yes, sir.
What's the underlying network
This is Ethereum based, and that's why the fee was 12 cents. We have also done the same demo on a Coinbase layer 2 chain where the cost was less than 2 rupees because, sorry, uh, this Coinbase blockchain, which is a layer 2 blockchain, bundles all the multiple transactions um, in their chain and then post one bundle of transaction on Ethereum so they save cost. So there, for the same transaction, it would have cost me less than a rupee or 2 rupees.
Then why have you, sir, and why you chosen ERC-20 while there other options were available?
ERC-20, yeah, that's a very good question. ERC-20, this is easier to implement to show a demonstration because there are only 4 or 5 functions. But if we are developing or if we want to invest in some DeFi app, then ERC-20 is not the right choice. We have to move to, what's the next standard we should use? ERC-721, is that the one?
Ethereum base, Arbitrum, Solana, all these are blockchains that can reduce the less than 1 PKR fees. You can do the transaction.
Yeah.
You can send 1 million PKR from Pakistan to USA.
Sure. Yeah, is that this Ethereum is the most trusted chain?
Yeah.
So that's why. But you are right. You can do that on Solana, and the cost will be, I think, 10 times less than this particular cost. Similarly, if you want to use layer 2, you can even save more. Yeah. Yes, sir. Mm-hmm.
Stablecoin like USDC and USDT contract in US dollar. Would any rise in USDC and USDT would have any bearing on the actual real US dollar?
It cannot rise because of the arbitrage mechanism. So if there is a rise in the USD T value, people will sell their USDT. So more supply will be available, the price will go down. And the other way around as well. If there was no secondary market, no arbitrage, yeah, then you cannot maintain stability. So that's a built-in stability within the system itself.
The arbitrage actually relies on the issuer's ability to bring it back to par.
जी.
Only that it works.
जी.
We've had stable coins which weren't very stable.
जी.
For the example that he gave over the SVB bank as well, the problem was that some of the money they were holding in high liquid assets was in that particular bank and went kaput. And it took them for a while to recuperate it.
जी.
So this stable coins are not actually a currency at all. They mimic a certain currency. And the arbitrage depends on the issuer's ability to keep it there.
And that's why we need 100% collateralization.
Yes and no.
With some regulatory guarantees.
Yes and no. I tell you why no. No, because you will invest in government security, right? Let's say 90% government security is 10% bank. So the banks are up and solvent, things are really good. And the problem with government securities is that the price goes up and down. You've had tremendous volatility over the last 1 month. So they would have it margin calls. Where issuer of the debt would be paying from his pocket to fix it up. So you need tremendous capital to keep it.
Yeah. Again, I would say I am not qualified enough to answer this question from a technical side. Yeah. No, I understand.
You make money by interest spread, right?
Yeah.
So basically, you're issuing current account,
Yeah.
debit card, theoretically speaking. And so because you're doing that, the money that you make on interest costs helps you keep the currency afloat and pays for everything.
Yeah.
And that lovely box as well. And once you can't do that because of the distortion in NAV, which actually would happen at SVB Bank as well, then there's a equity call on the issuer. Hence, this whole arbitrage depends on the issuer's ability to do it over an elongated period of time.
The collateralized asset has to be released.
Margin by definition are not technical.
जो Genius Act आया है, ये अभी आया 2025.
Can you give the mic?
All these regulatory acts that have come in the US are just very recent, very recent. But these stable coins have existed for the last 10 years. तो ये जो हमारी थिंकिंग है कि जब तक रेगुलेटरी फ्रेमवर्क नहीं आएगा और जब तक रेगुलेशन ज़बरदस्त नहीं होंगी तो ये चीज़ें स्टेबल नहीं होंगी. I think that's a secondary issue. The first people need to understand the business case, the actual business logic and keep that in place. उसके बाद रेगुलेटर को कायल करना आसान होता है. हाँ धंधा होगा और चीज़ें लॉजिकल होंगी, सेंसिबल होंगी, रिस्क आपने मैनेज किया होगा तो रेगुलेटरी हो जाएगा. आपने रेगुलेटर को कायल करना होता है ना कि ये फ्रेमवर्क है, जी काम कर रहा है. इट इज़ हाउ इट वर्क्स. सो नाउ यू हैव ऑल दीज एसेट विच आर इन ट्रिलियंस. रेगुलेटर ने करना है तो कर लें, नहीं करना तो दुनिया तो फिर भी चल रही है.
Sameer Saab.
Broader question about cryptocurrency. You mentioned the concepts of anonymity and privacy. I think Dr. Dazartash also in the book that you have one but you don't have the other. I'm not clear. My follow-up question is, for example, we hear that cryptocurrencies are used for criminal transactions. So if you have that traceability, then how is that possible?
So if you have that link between the address that we showed you and some individual or organization, then it is not anonymous and private anymore. So if you know that this particular transaction was made to do some illegal deal, then if you know this address belong to that person, you actually can go and ask that person, why did you make that transaction?
Key is traceable.
Yeah.
The person behind the key is not necessarily traceable. Key is traceable. It's not. But who's the person behind that? That's a different level.
Yeah. Yes.
I would like to add on this. So, sir, here one thing, like if the wallet you have, like Bybit, recently we saw one crash in market, crypto market at 10. So that wallet belongs to Bybit exchange and that got hacked by not the North Korean's hacker backed by the government. So that publicly available and linked to the Bybit exchange. So when that $1 billion got hacked, and everyone knows that where these money was going through. From the Bybit exchange, everyone knows on the blockchain that this money is going from Bybit exchange, from this wallet to this, and this, and this, and where they are going to exchange this money. Okay, so this is the one case which you are telling that if someone know the wallet address, then definitely you can trace them. Like in our case, like if I am the person who is no one from the world know, then if I do any transaction, you can trace me on the blockchain, but you cannot trace me as a person. You can trace my wallet. Even sir is sitting here. Someone from the USA doing any transaction, you can directly check on base scan, like sir also did Explorer. So you can check all the transactions happening across the globe, but you cannot trace the person that doing those transactions. So that's the two things. I hope it
Got it.
Yeah, we can have this follow-up discussion over coffee.
Absolutely, we can do that with discussion over coffee. We have tea break. Everyone, thank you so much, Dr. Basit, for your session.
And can you, thank you.
I hope it was a lot of fun, right?